Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Earnings season is going to pick up very quickly this week. We have basically a full lineup nearly every day. Monday, as usual, kind of a little bit slower, and then things really get going after that. But we are really entering the heart of earnings, and what will be interesting this week specifically is we're starting to get some bigger tech names, and with tech having recently been like the best performing or some of the best performing stocks, it's going to be really interesting to see what the numbers look like and what the stock reactions look like. All right. So after the close on Monday, IBM about 10 points or so is what they're looking for. And I'll be honest, I don't really know what to make of the setup. Last quarter was decent, and it wasn't a particularly large reaction, which is notable because prior to that, it had been a pretty consistent large mover. So I'd say like right now, it's the stock is off its low, obviously well off its high. I do think that it could see maybe like 6 to 8 points either way, but obviously options are priced above that, well above that too. So it's kind of tough. Um, you know, I feel like I'm still kind of on the fence with this one. In terms of like the tech names reported this week, it's one of like the certainly like the laggards. Also, it's one of those names that still they haven't really given any numbers yet, so it still could be volatile. And that's why I'm on the fence because prior to last quarter, it had been pretty consistent in moving more than what they were expecting. It's just that this quarter options are on the high end, so I'm a little bit more hesitant with it. But it'll probably be a game time decision for me. For the Open Tuesday, Coke. So about 325 or so. I don't really trade the staples that often, but in the last like month and a half, they've really been moving around pretty nicely. Um, they haven't all had big moves on earnings, so we've had a few of them report recently. They haven't really had huge moves, but I do feel like they've had nice tailwinds after, right? So whether it was like Conagra, um, Kraft Heinz recently has been like a decent trade. So like some of these names haven't been great into and immediately after earnings, but like a week after or 2 weeks after, they seem to have kind of like performed pretty nicely. Pepsi, which is a peer, back near its 52-week highs. So maybe Coke sets up for like a longer term bull idea, or even like a calendar bull spread, looking for more of a recovery post earnings. Um, Big defense name, Lockheed, about 26 to 27 is what's priced in. Defense names had a roller coaster March too. They weren't immune, and Lockheed will be the first big name to report, so it should be interesting. Volatility on earnings has been kind of declining on this though since last April. So since last year, the volatility around numbers has actually been quite a bit lower. So just based off like the last 3 quarters, the option pricing seems pretty high to me, and that basically high option pricing coupled with like kind of decline in volatility around earnings seems like a bad mix. Northrop Grumman NOC doesn't report next week, so it could be a decent sympathy trade um, because it probably should respond to the Lockheed numbers. Um, Also, bigger software name SAP, 1225 or so is what's priced in. Those are monthly options though. Large software name, but it's lost some of its significance. I feel like there's a lot of companies that have kind of moved past it in terms of importance when the numbers come out. It could be a good read through to other like enterprise service names though, like maybe like a Salesforce or a Workday. Those two might respond to this, or even like an analytics company also. But specifically for SAP, probably not that interested in trade like on this stock. But those other two names, maybe something worth like taking a look at. After the bell Tuesday, Chipotle. So 90 to 94. So I know it's a little bit wider, but option spreads are kind of wide on this one too. Um, it's already had a huge rebound, and you can see that it's back above all of its moving averages now. I guess I'm much more cautious going into this quarter. Business was definitely impacted, no doubt, and valuation is still very high. Plus, it is sold off on earnings 3 quarters in a row. So, if anything, maybe like a decent speculative bearish setup. Uh, Netflix, 53 to 54. And we just caught a trade on this just like over the last couple weeks when it broke out and really shot higher here, and the setup from when we were looking at it just a couple weeks ago to where it is now is completely different. So the stock is extremely extended. Expectations just went through the roof. Um, I'll say if it does pull back a little bit further, maybe into like the 400 area ahead of earnings, might be worth taking a shot on some options. But after the run it's had, I feel like it's going to be a little bit tougher of a setup for a trade, in my opinion, just because I would think that some of like this really huge run is people kind of pricing in like a good number based off of the stay at home bump, right? So I feel like the option pricing just got way more expensive, the stock way more extended, so it's going to be definitely a tougher setup after this recent week and a half move. Snap. So about 225 is what's priced in. It was Snap. It was really on a roll until last quarter, and then things kind of like took a turn lower and really escalated pretty quickly. So you can see like after last quarter, it just kind of set the ball rolling on the downside and just really fell apart fast. It's going to be reporting in, I guess, what you would presume would be a tough environment for ad spending, right? And it's already coming off a weaker print. So to me, maybe sets up better for like a bearish trade idea. But I think if I did anything, I would have to get the risk down just because options seem a little bit more expensive. So may look at like spreads, like put spreads or some sort of bear spreads. Texas Instruments, so bigger chip name, 8.5 points. It's actually one of a handful of big chip reports next week. Last quarter, really only kind of so-so, and the quarter before that was on the weaker side. So here, back in October, last quarter was only so-so. So it's lagged pretty materially during this recent bounce. It does, to me, appear to have more risk lower into earnings. But again, kind of like a theme, option pricing is kind of high on this one. And if I had to choose between this and maybe some of the other semi reports next week or this coming week, I think I'd prefer to maybe look at like some other names, like possibly like an Intel or a Xilinx. For the open on Wednesday, Biogen. So Bio's been on a really nice run. Biogen's pricing in about 29 to 30. First big bio to report, but earnings have been kind of a less of an event on this recently. I think what people are going to be curious about is the Alzheimer's filing, which I've read that some people have expected it to happen by now. So if there's no update on the Alzheimer's filing, 29 to 30 seems very, 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 very high. If there is an update on the Alzheimer's filing, then 29 to 30 might be doable. But again, I mean, just for like a strictly like an earnings play, the options seem expensive. But I think that's because people are thinking that there's possibly some sort of update coming. So it's definitely more of like a higher risk setup because you really are going to be revolving around whether there's some drug news on the side. Delta. So 3.5 is what they're looking for now. I don't know how else to say it, but airlines have been a complete mess, and this is going to be the actual first airline to report. So they've given numbers. There's been a lot of headlines on the airlines. This is stuck in a really tight lower range, and I'd say the option pricing overall is not too bad. It could be one of those patterns though where you get maybe like a modest 1 day move, and then it has like a follow through like 2 to 3, 4 days after that. So this might be like something to look at as maybe like a quick swing candidate based off of what the initial move is, and then because I feel like if the pattern resolves, could have a few days of follow through behind it. So it might be like a quick swing candidate for me. Kimberly Clark. So 6.5 points is what's priced in on KMB, and I feel like if there was ever a quarter where KMB was going to crush it, it would be this one, right? So they're a toilet paper manufacturer. I'd say expectations are high, right? But at the same time, it's still off its 52-week high, right? And it's not like, I mean, just getting back to the 52-week high is more than what the options are pricing in. So it seems like it still does leave some room. It definitely more speculative, but to me, it seems like there's still some room higher. So might look at like some sort of bullish idea. So maybe something on like the lower debit spectrum, maybe something more speculative. After the close on Wednesday, CSX. So typically, this is one of the first rails, if not the first rail, but this quarter it's actually going to be the second because KSU reported this past week. They're priced in at about 4.5. KSU's results were very solid, so you can see CSX jumped on Friday, probably due to that. CSX is a bigger player though, so it could still have different numbers than KSU. I've done sympathy trades in the past on this one, and UMP actually reports later in the week too. So NSC, right? UMP, CSX both report. NSC doesn't. NSC might be a nice way to play those or approach those because the options should be less expensive because they're not pricing in that catalyst. Lamb. So another big semi. About 24.25 is what they're looking for. It's been a leading semi and it's been relatively consistent with bigger moves over the past couple of quarters. I personally haven't traded this one much, and I feel like usually the way I go about this is looking at AMAT. So that might be what I do again this quarter. Look at AMAT as a potential sympathy trade because AMAT doesn't report, so the weekly options shouldn't be as expensive as Lamb. STX, so 4.5 is what's priced in. I've looked at this for swing trades in the past, but I mean, I haven't really liked trading it around earnings much. LRCX or Xilinx, probably more interesting to me. But I'd say you could also look at like Western Digital. That might be a mover off of FTX numbers. Even Micron, maybe to like a lesser extent. So Xilinx, which I just mentioned, they're also reporting Wednesday. 7.5 points is what's priced in on this. And of the three, Lamb, STX, and Xilinx after the close on Wednesday, I'd say this is probably the most interesting to me. Option pricing, decent. Stock has been an underperformer for a while, and it's coming off a few weak quarters in a row. So it does seem like there could still be some downside risk because, I mean, obviously it's had a huge bounce off the recent low. So a few weak quarters, some bigger moves over the last few quarters too. So option pricing seems decent. It still seems like it could be a mover. So this might be one that sets up well for a volatility strategy actually, or even maybe even just like a speculative bearish idea. Honestly. And then last on Wednesday, LVS. So 5.5 points. First casino to report. So I expect some movement on this. It's been in kind of like a tight recent range here, right? Tight like week and a half range. So I feel like it's due for a move. It's tough to be very bullish because casinos are still closed, right? But it might be a good candidate for a calendar strategy or a longer term position, especially if you have conviction on it. All right. Before the open on Thursday, Citrix. So this is priced in at about 12, which is definitely expensive, but it's also been one of the names that's really had a kind of a wild month and a half as a beneficiary of the stay-at-home trend. So the stock is just maybe like a point off its 52-week high, and it actually had a solid quarter in January. So it does have some fundamental momentum. Now it's got some technical and possibly some stay-at-home, the stay-at-home trend momentum going behind it too. So like the biggest question to me around this is how much is priced in, and with the stock basically at its 52-week high, like I'm more cautious. So I'm probably going to avoid it for earnings, but may look at like a quick swing if it like dips into like the low 130s or even like the 120s because I mean, it does have pretty good momentum behind it, so might look for like a quick swing trade after if it gets hit. Dominoes. So um, this one's pricing in 32, 33 in that ballpark. It was a huge, huge mover last quarter, and it's actually held in pretty well. But option pricing seems high to me, as do expectations. I mean, I think like it's set up well for a retest of the February high, but that's only about 20 points away. So, if I did do anything, it would have to involve getting risk down somehow. So whether that's spreads or flies, I mean, just the option pricing seems high, but I do think like it could have like a path back to retest that 52-week high from late February. And then UMP, so like I was talking about CSX, UMP reports about 9 points is what they're looking for. So the thing is, because CSX reports first, UMP is probably going to respond to that. But there have been quarters in the past where the two have moved kind of in the opposite direction. Like CSX will be maybe like surprisingly bad, and UMP is good, or UMP is bad and CSX is good. So if UMP has a huge reaction to that NSC, that CSX number, um, could maybe look to go the opposite way. Or like I said, I mean NSC typically um, a good name to look at because it will respond to those numbers, and they don't report next week. All right. After the bell Thursday, EW, so MedTech name, 1375 is what they're looking for. MedTech, the numbers have been kind of mixed, but EW showing positive signs. Through all of its near-term moving averages, still off its 52-week high, which at this point is about 20, a little over 20 points higher. So to me, it's not the easiest stock to trade, but it does typically move when it comes to earnings. So even at 1375, it seems like there's some room on either side. Honestly, I mean, it does have a path back to its high, which is 20 points away, also well off its low, and it does tend to move pretty consistently. So this might be one where maybe look at something cheaper, lower debit, more speculative, go a little bit further on the money on both sides. eHealth. So this one is priced in about 25 points. Those are monthly options. It's been in the news recently as there's been a vocal short who just came out on it. The stock has recovered actually all of those losses, and it's actually within striking distance of its 52-week high just based off what it's pricing in. So I don't really know what impact that short report's going to have on it, but it has been a huge mover twice to the upside this year. So on preliminary guidance here, and then again on the actual numbers. So um, I'd say I'd probably lean bullish. And again, I don't know what impact the short report's going to have, whether that means like the upside's going to be more muted. Not a really name I've traded all that much, but definitely something that could be a pretty big mover this week. And then Intel. So big semi report. The pricing in about 5 points or so. The chart looks good, and it's coming off a blowout print in January, above all of its moving averages. And Taiwan Semi, so just had really solid results. Option pricing, it is slightly high, but it does look like it's set up well for a move higher, and maybe like a staggered position. If you're worried about like the short-term downside, maybe like a staggered position with longer-term calls, short-term puts, just in case there's like near-term downside. But I mean, it does seem like one that has a little bit of momentum behind it, coming off a decent quarter. Taiwan Semi was decent, so I feel like it does kind of set up more to the upside. So maybe look at like something on the bull side. And then last but not least, Friday before the open, American Express. So 825 is what's priced in, which is definitely high. I mean, that's about a little under 10% move. Um, what's interesting about this is that banks have talked about how worried they are about credit losses, right? So it's been talking about ramping up their provision for credit losses, and I'm really curious to see what American Express has to say. It does occasionally move on earnings, but that pricing is so high that it's kind of keeping me away from it. Just the pricing seems very, very, very high. And it very well may end up moving that, but just based off what it's done historically, it just seems a little bit too steep for me. So I'll probably leave it alone. Could be a good tell for potentially like a Visa and a Mastercard though. So those could set up well for like sympathy trades. That's it. So lots going on. Basically every day you got a handful of big names, and it's really going to be like that through like the next, well, basically through like the end of April. So for like the next few weeks, it's going to be just packed day in and day out. So lots going on. Volatility across the board still high. We're still moving around. Still coronavirus headlines. So there's a lot going on. A lot of headlines, and I'm expecting some really good continuous like big moves. So should be plenty of opportunity. Um, so if you like these videos and you're looking for more information on options trades for earnings, like specific trade ideas, or if you're looking for more information on options education, please follow up with the link in the description of the video for more information on options and play. Have a safe night, have a healthy night, and I will talk to you all tomorrow.